Oh, Chris Pulver took a trade in our Discord.
Oh, really? Let me see.
Pulver alerts are now available in the A1 Trading Discord. If you want access to everything Chris Pulver is trading, click the link down below or click the link being dropped in the chat now to speak directly with a team member.
First time seeing that promo. Very nice, guys and gals. That was awesome. Hey, everybody. Happy Monday. Welcome back. A1 Trading just after 10:15 a.m. It's 10:18 on Monday the 7th. Pretty low impact day. Up on the day, which is always a good thing. We gapped a little bit lower. Let's take a look at a little bit of everything. My dog seems to be pretty indecisive today. Just want to hang out. What's up, bro? So we're dealing with a lot of chop. The big catalyst this week is going to be Thursday with the CPI news coming out. And I wanted to talk about that for a moment, kind of repeating what we've been mentioning here on session the last couple of weeks. Let's have a look at the calendar. So this week, all light impact, we were up on volatility a bit. So volatility, here's VIX. And if we go to VX for VIX futures, also up on the day. Probably a lot of this is due to oil, I would imagine. We've got another pretty big rip to the upside on oil. I actually did close out my CL positions. If anybody's in my Pulver alerts, there's two trades that we had. One of them was a 65.50 sell put and a 64.50 buy put. We collected about 50 cents credit, and I closed that one out. I think I closed it for like a 25 cents debit or less. And so that should have been about $250 per contract profit. So that trade is done and closed. And then I also had one that had a little bit more risk to it. And I just closed that out today. It was a 65 sell put. And I did one contract. And then I did a 55 buy put. And I did two contracts. I collected a net credit of $1. And today I closed out, so it was $1 credit, and I closed out for 49 cents debit or less. And so the reason I want to get out of that trade is I don't want to be sitting here with the exposure of what oil is going to do if we have more crazy stuff. Like obviously I was in based on support. The geopolitical event that helped this squeeze happen. You have to remember, like, hedge funds were crazy short, commitment of traders and advisors were crazy short. I just had another trade close for profit there, 250. We get that one updated. That should have been trade number 4. Get to edit that one today. So I've got 4 for 4 little winners today. Not too bad. I'll get right back to my train of thought here in a minute. Filled and closed for 15% profit target. Very nice. Okay, so going into the charts, and that one just got filled for profit as well. Well, that was pretty easy. Okay, so filled and closed for 15% profit target. All right, well, a little 5 for 5 on the SPX feels pretty good today. And I think I actually might take, am I getting greedy if I take another trade? Probably. 5 for 5 is pretty good. All right, let me get back to the thoughts on oil. So I was taking oil based on the technicals of support, okay? So the fact that we had the geopolitical event where nobody knows now. I mean, if we have damage in the Middle East and we have conflict in the Middle East and oil prices go up, makes sense. But what I didn't love is that oil prices were dropping even in the wake of China coming out and doing stimulus and having that 2-week run where China stocks could do no wrong, and they're still ripping like crazy. It wasn't until we had the tensions in the Middle East that then jumped price higher. Now, and I say that because what I don't want to see is oil prices then turn sharply lower, and my $65 put, which was right here at those lows, that is threatened. And even if it doesn't go below 65, the velocity in which it can move, and especially if we go lower, that trade has a lot of risk on it. So I was risking about $2,000 on the trade, and I just wanted to get rid of it. So ended up making about $150 profit today, and I'm just taking the profit and moving on and eliminating the risk. I don't want to be kind of exposed, especially if it was a credit spread, wouldn't be a big deal. If it was just a credit spread, wouldn't be a big deal. But because it was basically a cash secured put, I'm not going to take settlement on CL was my instrument here, but I'm not going to take settlement and say like, okay, go ahead and give me oil. I'm not going to do that. So the fact it was just up 50%, taking the profit, moving on, and that is the day. So CL is done. Let's take a look at everything else. Natural gas is pulling back a little bit. I actually don't mind looking at some natural gas um, in something like this. I hope natural gas actually does something like this, pulls back to around $2, and I'll probably get a long position with a credit spread. So I'm going to bump this up. I have a chart alarm set at these lows, which haven't been tested. So I'm going to set this at $2 here and go to like 2.00 and then put in a potential bull put spread and just give myself a heads up that I can take a trade on CL or on NG rather. Gold, super sideways on gold. This is my plan moving forward for gold. We're sideways. I hope that we can continue to stay sideways or just have this very light drift to the downside. And let's find the 50. Let's find the 100. There's also a chance that nothing happens here. We might just go sideways, sideways, sideways on gold. And the 50 period might end up catching up to price. And that's okay too. Because if we go sideways and then just find the low here, I might have to just say, well, I guess I'm just going to buy more gold. And that's understandable. But I'd like to see if price can dip between like the 50 and the 100. And that's the only way I'm going to kind of justify like getting in at these highs. I mean, I'm still running with gold to the upside. I, of course, want it to go higher. I think, traders, investors are pretty excited about gold going to 3,000. I mean, that level can certainly get hit. I would like to see a pullback first. I thought that the dollar impact would have a little bit more of a pull on gold, but it didn't. I mean, take a look at the dollar for the last like 5 trading days. Outside of today's pause, 1, 2, 3, 4, 5 days in a row, that's a big move on the dollar, and gold did nothing. So, I mean, we had the dollar move about 2.5%, and gold did nothing, right? So, if there's a lagging effect, maybe the dollar's already been kind of priced in for a bit of a squeeze. If gold shows a little bit more follow through with that stronger dollar, perhaps that gives me the pullback that I want. Just take a look at the structure here. Gold looks really, really good to just focus on buying some dips. That's it. Just focus on buying some dips. So if we pull back into this 50 period, that's 25.50. Between 25.50, 2500, I'm going to add to GC. I'm going to add to GLD. And I will dollar cost averaging on GLD. I'll probably take some options trades on GC. Silver. Silver is above the structure. There's 2 things I'm watching here. If this is a break and a pause, if it just gets a nudge higher to the upside, that could be a nice bull flag. I'm hoping it's not this. I'm hoping it's not past resistance and support. So this would be resistance here holding and then past resistance that is now support around 26. I don't really want to see silver come all the way back down to 26. Now, if it does, okay, fine. I'm still interested in adding long positions here. But ideally, I would like to see silver do this. Either just keep going slightly higher and then getting to my measured move around 35.80, or we have it hitting, pausing, pulling back to the backside of this trend line, and then making another push higher. Now, I do wonder if gold and silver make a push higher at the same time, or if we have to do a comparison. Here is gold versus silver. And over the last couple of years, we really haven't had a crazy outperformance by one over the other. So we have some pretty good structure. If you look at gold versus silver, right now, it looks like silver can get the upper hand if we just continue to push a little bit lower. That gives silver a slight outperformance. But from there, the nice thing is even though this has been going back and forth, both assets individually, I'm looking to go long on both of them. So all this is helping me kind of time. Do I think that silver could outperform gold, and maybe I can add more silver positions to kind of play that more aggressively, or do I think that gold can outperform silver? Does that make sense? So if we're sitting here at the low, here's a question for everybody. If I'm sitting here at this low on gold versus silver at $76, at this level, this is support. What would you do down here? Would you add more to gold or add more to silver if you're down here at the bottom? Hopefully this makes sense in doing the comparison between gold versus silver. If we're sitting at the bottom of this chart, I'm looking to add more gold to my portfolio because if we go up, gold is probably going to look better as a performer than silver. If we're up here, I'm looking to add more silver versus gold. Does that make sense? So this is a way to kind of figure out which one I want to allocate more to, maybe take on more trades, add more credit spreads. So it just depends on where they're at. But both instruments overall, I'm looking to go long on gold and silver. Okay. All right. Bitcoin had a nice little turn the last few days. We're up to 64,139. BITO turning the corner a little bit. I still want to see this one. I mean, really, this structure I want to see breaking. This one doesn't look the same as others. BITO looking a lot different than IBIT, looking a lot different than Bitcoin, looking a lot different than MicroStrategy. If we can base here on BITO, start breaking above, let's say $20 or $21, then this looks a lot better for hopefully a catch-up trade. So I did put in 16 by 15, collected about 350 to 365 credit. That's a nice little income play for the end of the year. If there's any assignment, like I said here, I'm willing to own shares at 1385 break even based on assignment both levels, and then my break even price with taking on 200 shares. So that's in my Pulver alerts as well. I'm willing to own some BITO. Eventually, they've already been approved by the SEC. We're waiting to see when the CFTC approves IBIT for option trading. So for right now, IBIT for option trading, you can see it says no options are available. But when we get the CFTC and the OCC giving this permission to trade options, then I will be adding a little bit more exposure to IBIT, which is the BlackRock ETF, to again just stay with the pace of whatever Bitcoin wants to do. I've got some measurements here. If this August low is going to be the low, and we actually make another push, I'm looking for this to get up towards 107 to 108. That's a nice little measured move. 109 is the Fibonacci level. My symmetry is around 107. If we have a fifth wave move, I'm still going to play around with that as well. So if we have a wave 1, this is a wave 2, there's a wave 3, pause for a wave 4, still have a wave 5. As a trader, I wouldn't be looking to take off any profit until we have a completed fifth wave. So if we're going to be in a bull market for Bitcoin and there's more upside here, I'm going to look for a fifth wave, and I'm going to start looking for divergence in that fifth wave in order for me to exit, take some profit, recalibrate my trades rather than sitting here and saying like I'm holding it forever. I mean, if my cost basis is around low 30s and we're trading up to 130K, that's a pretty good ROI as a trader, right? That's a 250 to 300% gain on your capital. That moves the needle for me. I still want to have some exposure. I'll probably keep some type of like 3 to 5% exposure in case this story of Bitcoin is manifesting into being a $250 to $500,000 spot price or $1 million ever in the next 5 or 10 years. But as a trader, I still like ROI, and I can scale back on some of the cash and protect it, go back to cash, and maintain a healthy kind of percentage base. Does that make sense? Because if I go from a 3% investment and all of a sudden it's trading for 6, 7, 8% of my portfolio because of profits, I'm going to take the profits, get it back down to that 3% exposure, and just keep the same like allocation. So that's what I'm watching as far as gold, silver allocation, Bitcoin allocation. All my China plays, same thing. HSI is up today for some fresh highs, so another gap higher. Going to Alibaba, we had another push higher, but still a red candle. I mean, this is okay. I'm just going to make a slight adjustment to my fib here for any type of add-on trades. I will take a look. So the 110 by 105, we put in a credit spread on the Pulver alerts here, collected 255. Let me see what that's trading for right now. Look at Alibaba for a second. So right now, 260 is trading for $2. We're already up 60 cents a contract. I'm okay with a 50% take profit. If we're seeing this trading down to like 125, 130, I might just take the profit on this and move on and then just reallocate. But I'm also willing, if we get a pullback here and it gets below 110, I'm still willing to take on some shares and take the assignment. There's some pretty rich premiums in here where if I want to own the shares and kind of add some covered calls and keep track of my stock ownership. I mean, right now I don't have any trades, or I don't have any ownership with this account for Alibaba, or for this one I do. So my Alibaba here, there we go. So I have it was $1,000 position. It was really small, and then a bunch of options, some ratio spreads. Like most likely, all of these right here in my account. The 110 by 105, that's the one that we just talked about. So that one is a little income play. These, I am probably going to let these run very near to expiration, or try to get like 75 to 90% of the credit. So I have a credit spread, have some ratio spreads, and I have like a 112, which is just a fancy way of saying cash secured put with a bear put spread, and I will let these run and try to max out profit. So overall, this should help me, maybe grab another $1,000 or so of profit. And if I have the shares, they're up. I'm up about $320 an account, so I'm up, I don't know, maybe like $3,000 or $4,000 on BABA right now. If I take a look at everything, just kind of revisit the China stuff. BABA is up. I've got $6,000 in open positions. I'm up about $13,300 for the year. Baidu up around $12,300 for the year. This one is running with mostly open positions. I do have some of them covered. I don't mind taking off some of the profit, but I'm not going to stop this thing at 112. I think Baidu has more upside. We're getting a bit of a pullback here. We have tested these recent highs. I'm hoping this has a reversal pattern written all over it. So this structure breaking, ripping up here, a little bit of a bull flag would be great. More upside. I'm trying to get this called away at like 125, 130. That's if it's aggressive. If I can lower my cost and maybe add in a call that's maybe even out further, I'm just going to let these things run. But I've said this for the last like couple weeks now. As this China stuff is taking off, I don't have a huge timeline on these China plays. Like if I've got profits here that are looking really good for the next 30 to 60 to 90 days, I'm going to start protecting those profits. And it's been a year in the making, and it's starting to pay out really nicely. I don't really have a long-term horizon. If I can look at my measurements, I mean, sure, Alibaba and Baidu to me look like they have the most upside potential. I just don't know how much conviction I have to stay in these trades when it's like right now there's so much gain happening in such a small amount of time. Usually we don't see stocks rip like this. And I mean, in a way, it's like maybe they don't even offer much of a pullback. That's the tricky part is, we might see this market move and you're like, okay, I'll just get a dip to buy in, or I'll get a dip to add a credit spread. And it just does this: pause and then go, pause and go, pause and go. And it might be on its way. Like this might be the destination. And if there's no pullbacks here, it's good for income. But what I don't want to do is tie up a bunch of option trades out farther into like, Q1, Q2 of next year, because that's not my timeline. If this rips up here to 160, I want to be able to get out of that trade as soon as possible, right? Because to me, that is my measured move. So anyway, that's where we're at. Has silver outperformed the stock this year? That is a good question. Let's find out. Let's go to XAU USD. Silver's got to be up there outperforming. Oh, that's gold. Let me go to silver. Silver, it's going to be close. Let me go to the beginning of the year. I mean, if we're up over 20%, we're outperforming the market. So here's 2023. Let's go to January 2024. Should have been down here near the lows. So here is, so we started out, looks like right in here. Right in here is January 2024. Let me mark that. Okay, so we're going from this area to current price. It's up around 32%. So the answer to that question, Lee, is yes. So silver's up about 30+%. Gold is up over the S&P. I think gold is closer to 25-30% as well. So gold going back. I mean, this one came ripping out of the gates too, by the way. This was, I mean, the credit spreads that I had and the diagonal spreads that I had, the leaps that I had, all these things were in profit within like the first 3 months of trading. It was a crazy aggressive move for gold this year, which wasn't a bad thing. It was just crazy. I'm like, well, I'm already hitting my profit target, so I guess I'll take some profit. So here's gold. We had a bit of a pullback to start out the year. Looks like something right in here. Gold is up around 28%. So believe it or not, silver's actually outperforming gold this year. That's you would think that's not the case. But either way, like 28.5% to 32.5% outperforming the S&P, that's pretty impressive. Now, is that common? Hardly ever. Hardly ever. Unless there's some underlying macroeconomic thing that's happening, which we all know is like potentially unraveling, right? If the Fed messes something up, we don't have a soft landing. If the US experiences higher inflation, if the US economy starts to slow down, if we have all these things are in the background, everyone's talking about it like the US is going to fail, something's going to turn over. But don't underestimate the power of fiscal spending and don't underestimate the power of monetary policy because China just did it. You can see how the markets responded. The US just cut with the Fed on September 18th. The market responded with higher highs thus far. The market's struggling at these tops for the US. I think we're missing a catalyst right now to generate higher highs. We're missing a catalyst, right? So it's understandable. Like we don't have the next justified reason to go higher. So what justifies this? Well, if we have CPI lower, will the market take that as great news? Okay. Maybe we're forecasted to print 2.3% year over year this week on Thursday. So is CPI enough of a catalyst to drive this market to all-time highs? And if we get to all-time highs, do we stay there? I mean, if we have price action that does something like this, let's say that's very quiet until Thursday, and then we gap up here, right? So you'd have like, a lot of chop here for the next couple of days. If we gap all the way up here, is this enough to then use this as past resistance to become support and then still melt up higher? Maybe, right? Or does this gap up and then fade? I don't know. But is CPI the next catalyst this week? Possibly. What else do we have? Well, this week we also have earnings season. So Thursday, Friday this week, we have some notable earnings. I had mentioned like Domino's Pizza, Delta. Friday is going to be all about financials. So you have like BlackRock and JP Morgan, Wells Fargo. Those are hard to trade because they're actually pretty low beta stocks and there's not a lot of movement. You're expecting like maybe a 2 to 3% move. My favorite earnings plays are ones that we're looking for like 8, 9, 10% expected moves. Those are a little bit easier and they're obviously easy to like get a higher than expected move, and also nice to like sell that higher volatility if you think price is going to be somewhat contained. So we have CPI and earnings season this week that could act as a catalyst. This is about it because the only other thing that's going to get sprinkled in for the rest of October. Okay, what else do we have? We're going to have more US inflation news, right? So you'll have your PPI and you'll have your PCE because CPI is going to be this week. We'll still have PPI, PCE. We'll still have weekly unemployment claims, which is going to be on Thursdays. But employment news is essentially done. Until we have non-farm in November, the employment news right now is like everything looks better because of that beat that we had last week on Friday for non-farm payroll. So this is now focused in on inflation again, and it depends on how excited the market gets about it. Okay. I think that with oil doing what it just did the last couple of weeks, with China pushing higher, with the PMI numbers that we saw, there is a concern that we could have higher inflation moving forward. And this is the reference that I've been making for the last several weeks. This is a third-party calculated inflation report, but when this thing bottomed hard at 1.5 and is now trading at 1.98, okay, or showing rather 1.98, can you imagine? Just put this in your head for a second. Can you imagine that this week's CPI we actually show a 2.3% year over year, and the market gets super excited, and then you go 30 days later, and the market shows us a 2.8% inflation year over year. Can you imagine the switch that the market would have? That's essentially what this is showing. We have a low here about 1.5 and we're currently showing 1.98. That's almost a half of 1% higher. So inflation is not gone. And for the US to, kind of take the victory lap before it's official, look, we're not less than 2%, right? We haven't hit 2%. I know we've come down a long ways, but if you ask the average American out there, is inflation helping or hurting you? Everyone's saying it's hurting. 70% of the economy is living paycheck to paycheck right now. Those that have the assets and have the cash are doing fine. They're still spending, but those that don't are feeling inflation, and they have been for 4 years now. So if we see this type of print happen, that's not going to be a good thing. Hasn't happened yet. This is all kind of lagging information. This is what makes it tricky because the market can get all excited because we actually print a lower CPI. Awesome. This is perfect. It's trending lower, but not paying attention to the fact that behind the scenes, oil prices are up 15%. And we've got fiscal spending in China. We've got PMI numbers getting lifted up for manufacturing and services, mostly services. Okay. You've got unions that are striking that are asking for 50% pay raises. Higher wages is also inflationary. So, point is, I think Powell and the team is smart enough to recognize that they can't just get crazy dovish. Because if they do, something tells me that they get crazy dovish and we see that the Fed is cutting rates. And all of a sudden you look at the 2-year, okay, which is supposed to be about the average of the stand. Look at this thing. This 2-year is up 0.5%. And so right now, did everyone know that the Fed, the expectations for the Fed in 2025 has dipped by about 50 to 60 basis points? So the Fed is no longer expected to cut as aggressively in 2025 as the market thought. This all switched within the last month or so. The Fed is still expecting to cut through November, December by 25 basis points to get us up to that total about 1%. But if that's it, and they go into a pause cycle, and all of a sudden the official cash rate for the Fed is around 4, okay, let's say it's around 4.25. Well, if it stays there, I mean, if the 2-year starts to jump hard, the 10-year starts to jump hard, we go back to this inverted yield curve between the 10 and the 2 right here. This is what Frank and I talked about for a while. I mentioned if the labor market improves, we're probably going to see that we get reinverted, right? We'll Top Gun this thing and, what was it? Testing foreign relations. We're inverted. Anyway, if we get inverted again, I think that's a good situation for the labor market, but it just means it's more noise for eventually when we come out of that. That's a softening the labor market. I don't know, but that's the whole discussion has been: should we have a recession? Are we in a recession? I just don't think that what's happening is we're not getting a broad, all sector related recession. Okay, we've had this rolling transitional recession, which has been this sector gets hurt really badly and then recovers later. Then this sector gets hurt really badly, recovers later, and it just hasn't been felt all at the same time. So I don't think that the bear pouring out there is wrong. It's just you don't get the full catastrophic great financial crisis type thing where everything's bad. And that's what they're planning for. That's what they're looking for. That's what they want. That's what they're, that's how they're selling headlines essentially. So the reality is things are still working, but this makes me concerned that the Fed is going to take this victory lap and all of a sudden they're going to shoot too dovish and too aggressive on rate cuts. And then they're going to be stuck where then they have to consider raising rates. And so we would have that potential where the Fed goes the most aggressive rate hike cycle ever to then when we officially start to cut, we cut aggressive, aggressive, aggressive. And maybe we consider aggressive through 2025. And all of a sudden it's here's the 2-year, here's the Fed funds rate. And all of a sudden inflation starts to get stickier, right? And then the Fed funds rate is no longer restrictive on inflation, and we have the same problem all over again. Maybe not to the degree of 9%, but if inflation is still above 3%, 3.5%, 4%, that is a problem. Okay. If it feels bad right now at 2.5%, 2.3%, if we go up by 0.5 or 3, it's gonna suck, And if if we have the longshoreman strike going on in January 2025, that was costing the economy about $4.5 billion a day. You do that for a month, it's going to be felt. There's going to be products and things that aren't getting to consumers. There's scarcity, there's outages. You're going to have people lining up out the door at Costco to get freaking whatever they want to hoard and store in their basement, or who knows, man. It's just like it's so fast to see how quickly people go from, everything's going to be okay to like emergency. And it's terrifying, So anyway, that's a little public service rant for the day. What else we want to talk about? We want to talk some currencies. I still think the dollar index, after this little rip, we're coming into a decent level of resistance on the dollar. I'm not ready to sell it yet without confirmation. One level I've talked about here is right around this 382 and 50 pullback zone. So if we go high to low and we pull back to that 38250, I'd be looking for this. This is a daily time frame. Look for a price rejection. Let me box this in for a moment. If I box this in, where's my box? There it is. If I box this in around that 38250 right in here, go down to a smaller time frame. Okay. Could I see? I mean, this is a nice inefficiency. Here's what I'd like to see on this dollar. If we see a bit of a bull flag and this thing runs up one more time, I'm going to look to see if we just break a trend line. If we break a trend line just like that, there's no reason to call the top on the dollar. But if we can go up a little bit higher, eventually when this thing rolls over this trend line, I would be targeting this pocket and inefficiency and see if this is actually going to start going lower and lower and then revisit these levels. I still believe that for the stock market to go higher for the rest of the year and to get to all-time highs again, the dollar is going to have to get weaker. I don't think the dollar gets stronger and the stock market goes up without it feeling really awkward, because the dollar is typically a risk-off trade. What we haven't seen in the currency market is we saw the dollar turn really, really hard, right? So today we have risk-off flows. Look at your New Zealand and Aussie to the downside. Look at your Swiss and yen to the upside. Risk-off flows as far as currencies are concerned. Dollars at the midpoint with the euro, but I mean, go figure. We've seen a lot of noise on the yen. Right now, we're seeing Aussie, New Zealand to the downside. Is it because, I mean, to have like very closely related currencies like China with the Aussie, New Zealand with their ties to China, to have these currencies getting beat up this badly, this is not like full on risk appetite, you know. So if we take a look at these dollar movements, the dollar with this rip has turned the Aussie dollar hard off of resistance, really hard. Okay. Now, do I want to short the Aussie dollar? No. This was a spot to short it, shorted at equal highs. Right now, I would just wait, because if the Aussie dollar comes back into the midpoint here, is there a chance that this starts to catch a bid? Maybe. If we have a weaker dollar, perhaps this is the trend. Otherwise, this thing is primed for just a range. Look at the structure. If all this Aussie dollar does is top out here, pull back and make a lower high, and then pushes back down, we're just in a range. Could I see that happening? Sure, that's an easy swing trade. How about the Kiwi? If you go New Zealand versus US dollar, we also have the New Zealand dollar that's expected to cut rates this week by 50 basis points. So they're planning on cutting rates on Tuesday night, 9 p.m. Eastern time, cutting by 50 basis points. Well, that takes away some of the carry trade opportunity that you'd have on the New Zealand dollar. And again, take a look at this area. I'll just box this in with a couple horizontal lines. We have resistance right in here, and we have some support right in here. And with this aggressive turn that we've seen the last 4 or 5 days, okay, if this pulls back at all, high to low, pull back into here, can you sell it here, stop loss above, and then swing back down to support? Well, look at your reward to risk. It's a 2-to-1. It's not a bad trade. If I put, 0.5% risk on the trade or 1% risk on the trade and I get 1% to 2% gain, it's an easy trade. But will we see the dollar actually give up the strength that we've seen in that very aggressive time? The dollar has not been this decisive for a while. And to have this rip to the upside, again, geopolitical concerns in the Middle East, what's the dollar doing? Gaining some strength. Okay. So I'd like to see how the dollar behaves between this current price and roughly 103.50. If you want to write a couple numbers down, 103.50 would be my resistance area. If the dollar first pulls back, okay, finds the backside of this break and then goes higher, I'm not looking to short the dollar as aggressively as I am now. So I still don't like the dollar. Outside of I was correct on this being a bear trap, and I was warning traders like, don't force sell trades on the dollar because it's very easy for the dollar to squeeze. It did. Okay. Now, right now, if we play around in the middle here, I'm not interested in trading the dollar at all. And that would translate into every currency pair. I don't want to trade the dollar if it's going to be noisy in the middle. If the dollar gets all the way back up here, sure, I'll short the dollar and short it pretty aggressively. If the dollar comes back to this low, okay, I mean, if we come back to this low, does it hold or does it break? If it breaks and we have more room to drop, well, that's an easy directional trade. If it's in the middle, I'm trying to stay out of it. If it's at resistance, of course, I'm going to look to sell it. So it's just picking your levels on the higher time frames. I don't like to sell or buy in the middle when the price is going to fight back and forth. I try to position it where I can buy low, sell high, and have a higher probability of a trade plus good structure. Okay. All right. So that's dollar index. Any individual currency pairs you want to take a look at? Yep. So it looks to be range bound, but that's why I'm watching that midpoint pretty closely. Because if it's in the middle and it starts to fade back down to the lows, then that's what gives the market a potential like risk on rally. So looking at the markets right now, everything's down. S&P's down about 1/3 of 1%, Nasdaq down 1/3 of 1%, Dow's down 0.27, Russell down 0.7. Russell volatility's up a little bit today, up about 8%. Oil still up 2.25 or 2.5%. Natural gas is down almost 4% today. Gold's down slightly. Silver's down a little bit more. Bitcoin's actually up nearly 2%. Good. MicroStrategy up 6.7. Good Lord. MicroStrategy, what are you doing? What is the news on MicroStrategy? Let's see. Moving higher on Monday. Pfizer, give me $30. 29.36. Okay. I've got some positions on Pfizer. I think I've got an October something expiration. Let me find out here. Pfizer, I did a roll on this one. Pfizer. Okay, so I've got a 29.50 out to not this Friday, but next Friday. Right now, my Pfizer position, I did a diagonal spread. And I'm just kind of slowly but steadily working the cost down. I'm up around $18,000 on Pfizer. And hopefully, if it gets called away at 29.50, then that's going to be roughly my profit. If it is something I can roll again or add another sell trade to it and continue this diagonal a little bit further, then I can increase it by, if let's say I do another like 30 cents credit, well, that lowers my cost basis by about $2,400. So about $300 per account. So any little bit that I can collect more credit for, this actually helps my little Pfizer position, which is good. So right now, a little gap higher, no complaints. I think Pfizer, I own some Pfizer. I've owned it for a while. I've been pretty interested in this one to be a bit of a catch-up trade. If we can pull back to, let's say, $32, that's a pretty shallow retracement just from this recent high to low. If all we did was find a little bit of a pullback in here from this 23% to this 38%, come on, Pfizer. Can't you do something like that? Can't you? We got good support back here into 2020. Have a decent dividend. Pfizer fundamentally is pretty strong. If I go to my snowflake analysis, so I don't mind some Pfizer. It's not like crazy high on the premium side, but I think it's a good stock to own. Dividend not well covered. Interest payments not well covered. Forecast to grow. Trading well below estimated value. It's been a value play from the price to earnings, price to sales side. Price to sales, price to earnings are very undervalued. Discounted cash flow. I'd love to see this trade at $80 a share. So longer term, sure, I can invest and be patient and expect about 2 to 300% gain. That's going to take a while, but I don't mind that being the play. Pure average 5.2 and Pfizer's 2.9. So a lot of reasons to be, in it. Plus, it's in the healthcare space, which is probably going to be one of the stronger sectors moving forward. Anyway, whatever. I like Pfizer. MicroStrategy. This thing is crazy. We could be. Are we going to break all-time highs on MicroStrategy without Bitcoin doing it? That would be nuts. How's my income play doing? So the 111. Let me see how that's doing. The 80 by 70 collected some credit there. Willing to own some shares. We're a long ways out from getting the signs. I don't know. It's a good income play. Let me see what I've done on MicroStrategy so far. MSTR. MicroStrategy is all income based. I've got a total of about 6K in profit, and it's just a lot like out to end of the year, out to Q1. I'm timing this a lot like Bitcoin. I haven't just bought MicroStrategy. I kind of wish that I did when they first split. They split back here at these lows. Dang it! I should have just bought this stupid thing for a fractional investment, but I didn't. So I just put in a bunch of option trades and hopefully still generate a bunch of income. But wow, impressive run. We'll see what Bitcoin does. It's funny how MicroStrategy's kind of taken on a price action of its own. Like it's close to getting to all-time highs. All right. Anyway, what other questions? Any other charts? Any other requests? We did gold. We did silver. We did oil, natural gas, some other commodities I've been watching. Talked about China for a moment. JD is down. I took some profit on that last week near these recent highs. I'm going to adjust this fib for maybe a bit more participation in JD.com. I'll see what this one does. If this settles back into like $40, $40 or less, I might be looking at some credit spreads on JD, probably out to the end of the year. Anton says 0.42% reported Pfizer for Q3. So they had earnings? They didn't have earnings today, did they? That was not on my radar. Pfizer. Their earnings date is October 29th. Okay. Let's see here. How about a strategy on coin? Yeah, we can take a look at Coinbase. And then am I good for the next couple of minutes, or we have Nick Phillips coming on at 11? Coinbase. So I had my fun in Coinbase. I did a lot of credit spreads back in here. I took some ownership on Coinbase all the way down here and flipped it for profit. I bought back in at the double bottom, flipped it for profit. I did a couple of bull put spreads in this area, but not a ton. I don't know. Let me take a look at something here. Take a look at the DAX. Yep, I'll take a look at the DAX. Let me go to Coinbase here. I'll look at the fundamentals and make sure. I want to make sure they have cash. So this would be a concern. So became profitable this year. Okay, great. That's not super encouraging though. Earnings are forecast to decline by an average of 20%. That's not good either. Shareholders been diluted. So we're looking at some, I'd say, not like ridiculously high for tech, but 28.6 price to earnings, 9.4 price to sales. This is what I don't like about Coinbase. So look at the current price at 170 to fair market at 108. The only way I'd be interested in doing something on Coinbase would be if the IV is high enough to sell options and do some type of 111 or some type of ratio spread. So let me actually take a look at this. IVR is, let's go to Coinbase. Trading at 60. It's not awful. Let me have a look and see what this buying power would be. So if I went out like 74 to 102 days, let's see what this looks like. So could I do, if I could take assignment around like 115 or lower, that wouldn't be awful. Let me see if I can orchestrate a trade like that. So if I did, let's say, if I want to just sell a put at 115, that's a 12 delta. I mean, I'm wondering if I like buy the 120, sell the 115, that's a $1.03 debit. And I could put in like $100 put. I mean, I could grab, this is a pretty good income play. Ties up a little bit more buying power than I want. But if I were to take ownership, here's how the calculations would work out. I could do, maybe I'd take this even cheaper, a 115 by 110. So what I'm doing is a bear put spread. A 115 by 110 gives me a $5 max profit, and I would still be willing to take on shares at $100. That discount would be this. If I take the assignment at 100, okay, and I get a 396 credit, and then I also get a max on the bear put spread for $5, I would own the shares at 91.04. 91.04 from current price means that the stock price would have to drop another 40, almost another 47% for me to get assigned. That's a big discount, obviously. If I own it at 90 something, I mean, what's nice is I could take a very quick repair. If I went out like 30 days or so, I mean, you're getting a crap ton of money on those premiums for a call. So if I did take the assignment at $90, I go out 30 days, I'd lower my cost basis by $20. So Coinbase was a stock that I did this back in 2021 and 2022. I took a break-even price of around, assignment at 165 and turned it into a break-even of around 55 and flipped that thing for 40, 50 bucks a share. So it is a trade that if you've got the cash, it's pretty easy to repair. So I think I'm going to take this trade. It's going to tie up about $4,000 in buying power. This account, this account, this account, this account. I'm going to go ahead and take the trade on. I'll put this in the Pulver Alert section. If I have to go, let me know if I have to go. Otherwise, I'll kind of wrap things up here in the next, I don't know, the next maybe seven minutes or so. So I like this giving me over $4 of credit. It's a bit wide right now, but if I can get $4 or better, that's pretty good. So this is going to be a 115 buy put, a 110 sell put, and a 100 sell put. It's a 1-1-1 strategy. I'm going to try to get $4 for the trade. So let me see if that will give me $4. Not feeling at $4. If there's two things here. One is it's an income trade. So if price goes higher, I'll just keep the income for $400 a contract. And if I get assigned, I'm willing to take the assignment, lower my cost basis, and repair the stock. Getting assigned at $90 doesn't tie up a bunch in these margin accounts. It's only going to be about $4,500 in buying power. So let me see if I can get three. I'll try to penny it down there, $3.99. Nope. $3.98. $3.97. All right, let's try $3.95. Filled at $3.95. Okay, so I'm going to try to get that filled for all the accounts here. 97 there. Filled. This account. And this account. So this account is going to be pending. Try to get $3.94. Well, that didn't take much. Got filled at $3.94. Okay. And this account here, try to get $3.94. See if that will fill. $3.93. Final offer. All right, got filled at $3.93. Okay, so let me get this drawn up. So I'm looking at a 115 by 110. So I'm going to start a box here. 115 by 110 goes all the way down to $100 actually. So in this area, so I'm doing a what was the expiration on this? I think it was out to January. 117. So 117 expiration, 115 buy put, 110 sell put, and then a 100 sell put. $3.95 credit. Willing to own, and that break even would be around 91.04. 91.04. If price goes higher with little to no risk of assignment, look at 90% profit target for income. So if I'm trading at $3.95 credit and I grab 90% of that, I'd still be happy making that trade. So basically, this is a little window that I get filled on. If I do get filled, I'm willing to take the assignment. If it starts to go higher, if Coinbase starts to work its way up, then this $3.95 credit will just start decaying, and it'll be trading for $1.80 debit, $1.50 debit, $1 debit. The spread's a little bit wide, so you might have to wait time-wise out to December, out to January for this one to be profitable, at least to the degree of 80, 85, 90% profit. But I like the trade. Okay. All right. So I'm going to add that into the Pulver alerts, and that's a good one. So yeah, I mean, that's a good one. The premiums are pretty solid, and I'll take the income play. To me, I really think it's more of an income play right now than it is an assignment play. Bitcoin would have to crash a lot harder for Coinbase to drop down into a $100 assignment. Not saying that it can't. Certainly it can. And I know that I have to be pretty aggressive on repairing the stock. So the important thing is, if I take any assignment, I know my break even, and I aggressively work that down and repair my stock. So if I did take assignment and I own it at 91, if I sold a $90 covered call, I would take the $20, $30 credit and just lower the cost basis, get it called away, and still make a couple $1,000 on the trade. So all in all, if I get assigned, I think I can actually make more money if I take the assignment. I'm just not willing to buy it right now at $170. Especially when I saw fair market value. What was that right here, right? Fair market value on Coinbase is 108. And so think about that. I just put in a trade right now that if I were to take assignment, I would actually own it at $91, which is at a discount to what is fair market value for a discounted cash flow model. So that to me is a good thing that I could own it cheaper than what it's actually fundamentally worth. That makes sense? So that's why I took the trade. All right. If I don't have any other additional questions, thanks for asking there, Ken. Hopefully that helps. And I like that trade. So I'll throw that in for the Pulver alerts in Discord. Otherwise, I will see you tomorrow and same time, same place. So, all right, we're looking at prices are still pretty choppy on the day, down about 1/3, 1%. IWM, the Russell's down a little bit higher, 0.7%. So, yeah, about a 1/3 on the downside today, still gapping. Price is pretty contained. No major catalyst this week until Thursday with CPI. So, we'll see if the market's even remotely interesting. Take a look at the indexes this week. Let's go to SPX. So far, the last 2 weeks have been very indecisive. One level to watch before I go. If we break below this floor, let me get a black line in here. If we break below this floor, which have been last week's lows, if we break below this level, there's room to drop to this FOMC low, and there's room to pull back a little bit deeper than that. Now, if we stay in here for the entire week and nothing really happens, CPI might be enough of a catalyst to drive it higher. So we could get to all-time highs this week on a positive CPI report, even though, like I said, I'm cautious of inflation, moving out 3 to 6 months and seeing that the Fed is too dovish and cutting rates too quickly, and all of a sudden we have stickier inflation, and we start to see inflation go trend to the downside, and then it floors at 2.3, and then all of a sudden we're talking about inflation back up to 3%, and the Fed looks silly. So that might not be a factor to the end of this year, but certainly into 2025, inflation is going to matter if it's trending higher. Okay. All right. Swiss. Today the Swiss is strong. I still am I'm against the Swiss bullish wise. I mean, they're cutting rates, or they have cut rates, right? They cut down to 1%. So if you go to cbrates.com, Switzerland has cut rates to 1%. And there's still a bit of a swap and a positive carry on that trade. I still like Aussie versus Swiss, CAD versus Swiss. CAD versus Swiss has actually been performing pretty nicely. I don't like that the outlier has been oil, though. I want to see this pair get stronger without having this like oil factor, even though it obviously helps the Canadian dollar. But a lot of it is this. I've got this yellow box that measures symmetry from this August 5th low. So if we go low to high, pull back, I'm looking to see if we hit symmetry. So even if this is just choppy in here, there's my low, there's my high. All this is just indecision, but I'm looking to see if we make a break for it. There's a push up there. There's a nice little pocket to trade back towards around 65 to 65.50. So I am long Aussie Swiss, CAD Swiss, Euro Swiss, Pound Swiss, New Zealand Swiss, Dollar Swiss. I'm not doing anything on the Swiss yen outside of holding a very small sell position. That's it. So I still like trading against the Swiss. It also is positive swap. But it's a risk off currency. So if we have a risk off tone in the market, I'm going to be sitting on break evens or some slight drawdowns, just collecting a little bit of swap. But I'm still looking at the bigger picture to have some risk on. If we have some risk on, then that's good for these trades to work out with pips as well as some swap. Yep, Pound Swiss, same thing. So I'm long against all of them. Pound Swiss, my target's 120. A lot of the pairs, just measuring symmetry from this August 5th bottom. So Aussie Swiss, for example, if we have a low to high, higher low to higher high. Now this market can turn and do something like this and give us some type of broadening pattern, pulls back and then rips up here. I don't know, but I'm pretty determined. Look at how this thing fell. Aussie Swiss on a daily time frame, these are crazy aggressive pockets. I think the market can find a way to get back to those and kind of neutralize it. So the liquidity, in my view, is all the way up here. So from this low to this high, I'm just waiting to see if it, takes its time but gets up there. That's good enough for profit for me. So if we make higher highs and higher lows, it's a channel. If we make, equal lows, then it's a bit of a wave pattern. But I'm still looking for that liquidity and that pocket inefficiency to get filled. So that's why I'm bullish on it. Okay. All right. Anton says 2.5 to 2.3 reported by the end of the year. So you're saying it's going to stay where it is for the next several months of prints? mean, forecasted this week is a 2.3 print year over year. I mean, if it stays there, great. But it still needs to push lower. Okay. All right, everybody. I will wrap it up there for today. Okay. All right. Let me get this updated in the Pulver Alerts Telegram portion for A1 trading. I'll add in that Coinbase trade. We'll talk more tomorrow, and have a good rest of the day. All right. Thanks, everybody. See ya.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.